All right, Johnson & Johnson is set to report its third quarter earnings before the bell Tuesday, with revenue projected to increase but profit to slip from the same time last year. The company also predicted to provide an updated full-year outlook after its $1.7 billion acquisition of V-Wave, which develops a number of treatments for heart failure. With just a few minutes left till the closing bell on Wall Street, we're looking at how to play pharma and biotech stocks with the Yahoo Finance Playbook. Joining us now, Chris Shibutani, Goldman Sachs Senior Biotechnology Analyst in Global Investment Research. Chris, it's great to see you here. Let's talk J&J. You do have a neutral on this name, but when you look at the results here, what are you going to be focusing on? Where would be, in your view, the potential upside?
Thanks for having me on, Julie. Yeah, J&J typically kicks off earnings season for healthcare, but also for the large cap pharmas. It really is the beachhead. Many read across sort of results. This is a business of both pharmaceuticals as well as medical devices. I think the medical device business is one that clearly the company has been paying attention to. As you mentioned earlier, that acquisition that they did continues to build upon the cardiovascular base of business here, which has been an element of strength for that business. On the pharma side, very strong, well recognized on the cancer side, multiple myeloma. Immunology, however, is going to be starting now to navigate a period where biosimilar competition will be coming in, first in Europe and then next year in the US. So we have to get through several quarters really for upside on the pharma. I think we're watching closely the strategic moves that the company's been making in medtech.
So you are neutral on this one, Chris. What would be some upside risks you would call out?
Yeah, I think it'll be interesting to see how they manage through this period of exposure to biosimilars. It's still a little bit less familiar territory. We know that once patents end, typically for what we call small molecules, pills and tablets, many generic companies can come in and revenues essentially fall off a cliff, hence the phrase patent cliff. With the injectable drugs, it is more of an erosion. The revenues tend to roll over. And here, many of the sort of less visible dynamics of how drugs get paid for and put on formularies makes it a little bit more challenging to sort of estimate the rate of declines. That decline is really important because obviously the companies have seen this coming and they're working very hard to offset that with new products and next generation products. Potential upside could come if the biosimilar erosion is not as bad as feared and these newer products, including across both businesses from acquisitions, continue to perform well. I will say that there's one other element on the stock itself. The company has been exposed to a bit of an overhang related to long-standing litigation concerns, talc-related injury claims. The company has been in a multi-year process of trying to get this resolved. We would argue that they're probably approaching towards the later innings. And if we can get some clarity on the resolution, that would be very reassuring for investors.
And Chris, there's another company I really want to ask you about. It's not reporting for several weeks. It is Pfizer. But yes, obviously, it has gotten a lot of attention for something having nothing to do with earnings, and that's an activist involvement from Starboard. Now, do you think that this is something that is potentially going to prompt better performance from Pfizer? The company has already been sort of embarking on I guess you would call it a turnaround project for itself. So what's your view there?
Yeah, I think when you look at stock performance for Pfizer, it naturally peaked several years back at the height of the pandemic, where the contributions the company made to address the COVID pandemic with a vaccine and the therapeutic Paxlovid were certainly tremendous. The stock, however, has had very challenging relative underperformance over the last few years, and the strategies that the company has been invoking, whether it's through M&A, have generated some mixed results. They recently had to remove a product called Oxbryta from one of their acquisitions. The company has already begun and engaged in a very specific cost-cutting or cost realignment campaign, which I think gives us confidence that we should see some ability to manage on the bottom line in terms of earnings. Two important steps are also yet to be unveiled. One is the company announced the chief strategic officer, who came from Wall Street and has yet to necessarily describe sort of what the playbook will be. And secondly, the company did announce that their longstanding head of R&D, the president of Pfizer Research, and the chief scientific officer would be stepping down. That in any biopharma company is an extremely important and pivotal role, really guides and shapes where the company will go in terms of disease areas, strategies. I think investors are going to be watching that very closely. To your question of activist involvement, it would be unsurprising given where you see the relative underperformance for the stock. But all the things that I already mentioned, outlined, would be some of the most important tactical steps that one could take. I do think that attention to some of these issues does heighten the level of urgency, and that's probably not a bad thing anytime the company is trying to address some of the challenges.
Chris, always great to see you and have you on the show. Thanks for joining us.
Thank you, Julie and Josh. Good to see you both.